Welcome back to another video, and right now I'm about to just give you guys a quick little breakdown on the trade that I took yesterday. So right now I'm taking a challenge with Top Step. I can show you the credentials in a minute, but I'm going to show you the stuff on the actual TradeAvate account. So if you look at the TradeAvate account in here, if it'll focus up in there, you can see I'm up $998, and essentially it's on the 100K account. I can show you the credentials over here also. So on the $100,000 account, I'm up $962 overall, and it's just within 2 days. And I'm about to show you the trade that made me $500 in one trade. So with that being said, we're just gonna get straight into the charts. This is gonna be a very informational video. I'm gonna get back to trying to do trade breakdowns for free so that you guys can always get a little bit of an insight. But with that being said, make sure you join the free Telegram if you haven't already. Get the free course in the description if you want to learn how to trade, and let's hop right into the charts. Okay, so welcome to the charts, and right now I'm about to break down this trade right here. So this is the trade that I took with all the markups, with everything and the reasoning behind it. So if you want, you could try to figure out the reason I took it. I got in the trade at 10:45 a.m. After you're done looking at it, now we're going to get into the reasoning behind it. So ideally, the main reason behind this trade was the fact that price ran below a weekly low at 10 o'clock in the morning. So if you guys understand the way I trade, for the most part, I trade a lot of the time based off of liquidity. I trade based off higher time frame liquidity and high probability liquidity. So where is high probability liquidity going to be resting? A lot of the times, the liquidity is going to be resting in areas such as daily highs, daily lows, weekly highs, weekly lows, session highs, session lows. And the higher the time frame, more than likely the higher the probability of that liquidity getting respected is going to be. So in this case, so if we go to the low all the way from over here, from February 5th, draw that line over. If we go all the way in there, it's going to be very small, but if you look very closely, you can see at what time, at 10 a.m., price ran below that low. So this was the main reason that I wanted to see price continue going higher. This was ideally where I wanted to get my entry. I wanted to be able to buy right in here. That's what I wanted to do. I wanted to be able to get in when price ran that low, but unfortunately I wasn't able to get in because this happened very fast. Price ran below this low and it started to reject and go higher very fast. So with that being said, I had to wait and let price show that it was going to go a little bit higher. So I went to the lower time frame. So once price ran this low, I wanted to wait for price to show me that it was going to continue higher. So the first thing I did was I pulled a fib from this low. Why this low? Because this is the low at 10:15 in the morning that ran that major weekly low. This red line is the weekly low, which is what? This is our high probability liquidity. So I'll say high probability liquidity. And that's just another way of saying there's a lot of money under this level. Why? Because there's a lot of orders. If you know how people trade, a lot of the time they put stop losses at highs and lows. So with that being said, the higher time frame high and low, in this case the weekly low, there's going to be a lot of orders resting. So if there's a lot of orders, there's a high chance that it's going to manipulate a lot of people. And that's what it did here. Price ran below the low, stopped them all out, and then started to rally. And this is where I waited for price to push. And then once it created a low and a high, that I can then look for price to possibly have a retracement, I pulled the fib from that same low to this high right here. Why am I drawing it to that high? Because in this moment, when price had a push, this was the lowest point and this was the highest point before this retracement. Yes, this went higher and this went higher, but once that went higher, that is when I was already in the trade. Before price had a push, we had a retracement. And where did that retracement go into? If you understand how I trade, you all know that I trade based off false breaks and fair value gaps. So if you look to the left, you always look left to see what's going to happen. If you look left, you see that we were trading at this fair value gap that got that got created at 10 a.m. right here. The 10 a.m. candle created this gap. After 10:15, price pushed. 10:30, 10:45, price came back into this gap. So at this point, I was bullish. Why was I bullish? Because I wanted to see price run below this high probability liquidity, which was the weekly low. Once it ran below that low and had a push higher at 10 a.m., that was my indication that time is in play and price is in play. One of the setups is false breaks, which was exactly what happened. Price ran below old low, had a false break, started to go the other direction. That was my indication that I wanted to see price go higher. That with time. So then with that being said, I waited for a retracement to get the best possible entry that I could by using the Fibonacci. I got in below the 50% and I got in at a 15-minute fair value gap with a what? A 50-point stop loss that was below not exactly below the low, but it was very close to the low. Right over here for 50 points. And then where was my target? I was ideally looking for a 1 to 2. So with 100 points, I was risking 50. I was looking for 100. And then boom, from 10:45 to 11 a.m., 11:15, that's when price was able to hit our target. And where was our target? Our target was at our 1 to 2. So that's I risked 250 and I made 500. But if you also look to the left, we had this gap that price traded into. That was also a good indication for why we should either take partials at this level or take it all out. Now, me personally, I took it all out just because it was the first trade of the week. It was the first trade on this 100K challenge that I just showed you guys. And I just wanted to be able to have a nice trade, nice low first trade. And that was yesterday. Today, I also had a good trade. And now I'm up $900 in total. But I'm not going to go over today's trade. This was a trade that I wanted to go over with you guys specifically because it was very textbook. It was a very good example of what you can do. And it's very simple. If you just want a basic schematic of what happened, I had a high probability low, which in this case was the weekly low. We had the weekly low. It ran, so price ran below the weekly low, pushed higher at what time? 10 a.m. I trade based off the 1 hour time frame, and the main times that I want to look for trades, if I'm trading London, I want to look at that 2 a.m. to 4 a.m. time. If I'm trading New York session, I want to look at that 9 to 10 a.m. time. And that's what happened. At 10 a.m., price ran below a weekly low, and then we got what? A false break move. Now, even though I didn't catch this low, if I would have caught this low, I would have been able to have an even better move, but I didn't. So what did I do? I waited for price to have a retracement and then push higher. And then where did I get that retracement into? I waited for it to trade into a 15-minute for value gap, and that's where I got my entry. And I was bullish. Why was I bullish? Because the premise was once price broke this weekly low, I wanted to see price continue to try to go higher. And then what was my target? I just had a target based off of what I was risking. So if I was risking $250 and I was looking for a 1 to 2, my target was $500. Simple as that. And that's how I was able to make $500 with that trade. Okay, so with that being said, hopefully this was a very beneficial and it gave you some value on how I trade. I haven't done a lot of these breakdowns in a while, especially because I've been doing a lot of my trading live with the VIP Trading Network, but I definitely want to be able to give you guys some value when it comes to free trading content because I am a trader. And at the end of the day, giving value is not going to hurt nobody. The people that do pay for the value, they're only going to get the value times 10 anyway. So with that being said, hopefully this was beneficial. If you enjoyed the content, if you found it valuable, make sure you like, comment, and subscribe. Like I said, check out the free course if you're looking to learn how to trade for free. You don't have to pay me. It's free. Join the VIP Trading Network if you want to trade with me live though and get my signals every single day. Let's see what happens with this 100K account challenge. We're going to see what we can do tomorrow. Only time will tell. Like, comment, subscribe like I keep on saying. And I'll see you guys in the next video.